Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, including news of more factory weakness worldwide, but is being ignored by equity markets. Overnight, the Eurozone flash PMI came in at 46.5, unchanged from the previous month. Germany's reading, however, was down to 48.8. That was down from 50.6 in March, and the lowest for 6 months. There was a slight glimmer of hope in France, where the PMI rose to 44.2 from 41.9. However, this is still deep in contraction territory, and optimists on the French economy are few and far between. Earlier PMI data on China was a little better. The HSBC flash manufacturing PMI there came in at 50.5, down from last month and lower than expectations. China's growth has slowed in the first quarter, and many expect that trend to continue over the rest of the year. Investors seem to believe that this weak data will push the ECB to cut interest rates next week, and stocks are higher in midday trade. In the US, sales of new homes rose in March, completing their strongest quarter since 2008, but the latest factory data out there shows manufacturing growth is slowing as well. Closer to home, money is gushing into Indonesia, while their two Asian rivals, China and India, have seen their investment inflows slow or decline recently. Indonesia is in the middle of a boom. Also closer to home, Standard & Poor's has warned Australia that its AAA credit rating could be vulnerable if it doubts the government's commitment to restoring the surplus, if the Aussie national debt keeps rising, and their economy fails to self-correct. Australia is one of only 8 countries still with a AAA rating. In a few minutes, the RBNZ will announce the results of its OCR review. No changes expected, but the tone of their statement will be of interest. The Kiwi dollar starts today unchanged overnight at 84.1 US cents, 82 Aussie cents, and our TWI is at 77.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.